This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with John Osborne of Charleston Angel Partners and Good Growth Capital. John, thank you for joining us.
Yeah, thanks for having me.
Great. So what was your background before investing in early stage companies? What did you do before this?
Yeah, I've spent a little over 10 years actually in more retail banking and traditional commercial banking and then in private banking. So always spent time in the financing of companies. And again, it was on the debt side as a lender and a banker for a number of years before switching to the equity side.
Well, great. So what excites you right now?
Yeah, I mean, there's just based in Charleston, South Carolina, there's such a great energy about the startup scene, both here in Charleston, which is really emerging, and we've had some good successes in software and technology companies starting and exiting here, but also in the Southeast with still what's happening in Nashville and Raleigh and Atlanta, Charlotte. You know, there's activity happening in the Southeast that I think nationally still isn't getting a lot of attention, which makes for some great value opportunities for us investing in early stage emerging companies in the region.
Well, that's great. So we have a lot of investors that listen to it and like to hear what's your advice for people investing in startups, in particular in the deep tech sector?
Yeah, we have a really amazing team at Good Growth with a lot of operational experience in pretty transformative technologies. Two of my partners are MIT alum that spent time licensing technologies out of MIT and research universities. And I'd say it's not a sector that a ton of people are comfortable with. And for us, it's great deal flow to be able to work with some people that really are working on transformative technologies and deep science that may not have, it's early and it may not have a real clear path to revenue. And even some of the scientific founders as familiar with the business model, they just know the science really well. And to invest there, we think is just a lot of fun. We enjoy the work of understanding what the technologies are doing, and also there's a lot of value that can be created right there. So we think we have a little needle in the haystack opportunity to keep finding interesting things that a lot of people may not see or pass right over, and we can turn them into gold.
That's great. And then on the other side of the table, what's your advice for people running startups in that sector? What should they do before they launch that business?
If talking specifically to scientists or someone that's got something pretty novel, really understanding your strengths and putting a team together that can complement what you're doing. We've helped companies even literally just forming their entity so that we could fund the company that they didn't even realize they needed to set up an entity. As simple as that. There's just a lot. I'd say just surround yourself with people who are experts in what they do and understand what you're an expert at.
Great. So let's talk about the state of investing in deep tech. How do you see the industry evolving? What changes do you see coming up?
For the kind of deal flow that we're seeing, there's definitely opportunity out there. I don't see a lot of technologists talking to industry as much. And so I think as we keep going and funding these and putting the deals together, just the understanding of what industry might need and how R&D is shifting with larger companies is the change that I see evolving. There's what the acquisition activity is happening in certain markets too really can help us drive where we want to invest in an early stage. Different than deep tech, what's been happening in the natural food sector, for example, is kind of fascinating. A lot of these larger companies aren't doing their own R&D, and if you get a product and a brand with some pull through and up to 5-10 million in revenue, there's really good multiples there. And so just letting the acquisition activity start to shape where we might get ahead of it, invest early stage to meet that happen is So the shift that I'm seeing.
Very good. So you work with the Charleston Angel Partners. What's the investment thesis there? What do the group look for, and what's their criteria?
Yeah, Charleston Angel Partners is a traditional group model with individual members joining and paying dues and then investing their own capital on a deal-by-deal basis. And we've got around 50 members in that group. And we see a lot of the things in Charleston, but also in the region, as I mentioned earlier, around, we've got a couple investments in Raleigh area and Columbia. And so they're looking at opportunities that are a company that's got a product, software, do a lot of software, some medical devices or diagnostics, and they've gotten out of the gate, but certainly aren't at a VC level yet. And similarly, they create a lot of value. We've had several members serve on boards of the companies and really help use their knowledge and expertise, as you'd call a traditional angel, to do and help out in addition to just the capital.
Well, great. And then on the Good Growth Capital, what's the investment thesis there?
So the investment thesis there with Good Growth is really similarly, all the partners have operating experience. Every single one of us have started our own startup and made a payroll and sat in the operator seat. So leveraging our network and our understanding of building companies in addition to the capital is really core to our thesis. We're actually a women-owned fund. 3 of the partners are women. And we have a very diverse set of founders in our portfolio, which we are big believers in. And it's not intentional in the thesis. It's just happened because we are a team that founders are comfortable coming to us and talking to us. So finding maybe overlooked opportunities, if you will, because of diversity of team and or the complexity of the deal and the science and what they're working on is right where we like to play.
Great. Can you talk about 1 or 2 startups that fit that thesis and how it played out?
Yeah, absolutely. I mean, our best performing investment in the portfolio is a company called Skyhawk Therapeutics, a women founder, actually incredibly deep technology at it. And we got in that first round. One of our partners, Maureen, actually helped them from the get-go. And we were in their first round at an $8 million valuation. Long story short, a year later, they were valued at $156 million with a strategic partner, and subsequently have done $300 million in upfront license deals. So we got in early, we recognized the opportunity, and it's played out really well. Another in the software side is a company founder called Igor Javlikov, who actually built the voice dictation software that sold to Amazon that powers Alexa. He had a new startup for an opportunity that he saw in that space, and similarly we're able to get in early, help Igor with his seed round, and he's off to the races. He closed a $20 million A round with Revolution Ventures and Graycroft and some big name VCs in that deal. That it's been really fun to be a part of his journey.
Well, very good. So you see a lot of startups. If you had to pick out 1 or 2 challenges you see most of them struggling with, what would you say is the main challenge startups face today in launching their business?
I think really understanding the competition and the market that they're in. I see a lot of startups that have their own idea and almost develop it or work on it in a vacuum without truly doing a lot of market research. And ultimately, they can waste a lot of time working on something that there's already saturation with competition in that same space, and they just don't realize it. So I always encourage startups that are out there trying to put something together to really, really focus on what the market's doing, how you're different than what's out there, why someone is going to use your product, how it's materially different. Otherwise, we can just waste a lot of time and energy.
That's a good point. Well, you see a lot of applications and sectors out there in those 2 groups. If you had to pick 1 or 2 that you think are really good opportunities for investors to pursue at this time, what would you call out?
Well, I mean, obviously our thesis is on some of these highly transformative tech opportunities. the environmental technologies that are out there, I think is still hot. There's still a lot of interest and effort into things that are going to have a positive impact on the environment. Battery technologies, of course, are really interesting to a lot of people as energy consumption and autonomous vehicles and how things are powered. It's definitely of interest to a lot of folks. So that sector is highly compelling. And like I said, oddly enough, the natural food sector is really interesting and compelling because of the acquisition activity, but also consumer demand and sentiment about having things in their body that are a little more natural. And those two tend to be pretty interesting right now.
Well, those are good ones. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Yeah, I mean, I think for anyone out there listening that isn't familiar with Charleston or South Carolina and what we're doing from an emerging startup scene, the Harbor Entrepreneur Center is actually a nonprofit center that I started with co-founder Patrick Bryant several years ago. And we run the Start an Accelerator program there that's kicked over 80 companies out of it. Over $6 million of seed money has been invested in those startups. And so there's some really cool activity happening in Charleston. We've had several exits that have occurred, a couple of software companies IPO that people may not realize, Blackbot and Benefit Focus. So it's definitely an emerging scene and a lot of fun. And if you hadn't been to Charleston recently, come on for a visit.
Great. Well, how best for listeners to get back in touch with you?
I'm pretty active online and easy to find, but LinkedIn actually is a great way to just ping me with a message or invite to connect on LinkedIn, and I'll be glad to get in dialogue with you.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Wonderful. No, I really appreciate the opportunity.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.